payrolls, and we did see there wasn't a lot of discrepancies between the forecast and the actual number. So this is Forex Factory. Now, when you look at this, you want to focus on the red folders. For those, let me just start from the bottom going to the top. There are three types of folders or three colors of folders here. Now, when you look at the yellow folder, it's low impact expected. Yeah, there's not going to be much of an impact when this news is going to be released into the marketplace. Now, when you have an orange folder, this is medium impact anticipated. What you would want to focus on or pay close attention to as a trader is the red folders, whereby you anticipate that there's going to be volatility as a result of these news releases which have red folders. So remember, first Friday of each and every month we do have NFP. Now the numbers we were anticipating was 159,000 jobs. Actually the number came out at 151,000. Now in a country of more than 200 million people, a difference of 8,000 jobs is not a lot. So we didn't anticipate a lot of activity as a result of that news release. Now, moving on to yesterday, which was 12th March 2025, whereby we were anticipating CPI. CPI, it's a broad measure of inflation. Basically, it looks at, okay, how much were people buying meat, eggs, anything. We did look at this data. Let's say if you open this detail. Now, if you look at this folder here, if you click on the folder, let's go to the core CPI. No, let's look at the CPI itself. And then you click on a red folder here. Let's say, for example, this one. You can see this is .gov. This one is .com, .blog, .ca. But if you have anything that has a .gov to it, this means it's an official government document. So this is what you would want to look at as a trader. Now, this was the initial this was the document that was released yesterday. And as we were looking into it, it was looking at a lot of things, basically everything that consumers are buying technically. Anything that a consumer can buy. Tulikuwa tumeangalia hapo, we have new vehicles, used cars. When you look at even bread, you look at cookies even, bakery options, beef and veal, everything that a consumer can purchase, this was the document. Now, it's usually averaged into what we see here. In simple terms, it's usually averaged into these numbers here. So we can see the previous numbers. So this is a month-on-month release. These are the year-on-year release. Now, if you look at the M/M, we can see that the previous number was 0.4%. We were forecasting 0.3%. The actual number came out very low at 0.2%, which is more than half of what we did receive last month. Now, if you go to the charts on gold, let's say, for example, let's go to the 1 hour time frame. Ever since yesterday, the data was released at 3:30. First of foremost, you need to ensure that the local time corresponds. You can see this is 3:21. My local time is 3:21. So you need to look at this data and ask yourself, okay, chat. I'm sharing my screen. I am sharing my screen. Let me share again. I do believe I'm sharing my screen. Brent, unaweza ona my screen? Anexla? Veli?
Yeah, naona.
Okay. Now, from yesterday at 3:30, remember we have moved into DST, yeah? So you need to be very careful. The news release was somewhere around here, this candlesticks here. If I was to zoom in, it was this candlestick here, this particular candlestick. So this was the initial release of CPI, and we saw fast prices reacted to the upper side, came back down, grabbed liquidity. We were identifying this region here whereby prices had been consolidating for more than 1 day, 4 hours. So for more than 28 hours, prices had just been consolidating on this particular region here. Now, as you can see, prices did break to the lower side. This low that was made, I do believe this was Tuesday. This was the low that was created on Tuesday last week, 11th, this week, sorry. And the market aggressively rejected that region. So you see how this candlestick closed above. This means that it had grabbed liquidity and we saw prices moving further to the upper side. Now, if you would remember yesterday's price action, I did have a sell limit at around 29.30. it was somewhere looking at that at data to the left hand side. We did have these equal highs, so I did have a sell limit. My stop loss was just above this region, of which I did get stopped out, but on one of the accounts. But I do use a martingale strategy whereby today morning when prices did open, I scaled into the positions whereby I anticipated. So martingale is a very risky strategy to be using. Yeah, I won't advise newbies to be using martingale strategies. But going back to the news release. So in the next 6 minutes 15 seconds, we are going to have PPI. Now, what is PPI? Remember, yesterday we were looking at consumers. So this is going to look at producers. So this is the producer price index, or as better known as PPI. Now, what you need to look at as a trader is the usual effect. So if it comes out actual greater than forecast, it's good for currency. So if it comes out lower than forecast, remember this is the forecast. So if it comes out lower than the forecast, it means that we are anticipating a weaker dollar. Now, if you're looking at gold, if this data comes out weak, we anticipate gold to continue moving to the upper side, of which that is what we are anticipating in the next few minutes here, whereby we do anticipate gold. There's a very high likelihood we might go to form all-time highs. Now, looking at the previous data, the previous number was 0.3. The forecast is at 0.3 also. So if the number comes out at 0.3, we don't anticipate a lot of volatility, okay? But if it comes out anything lesser than 0.3 or higher than 0.3, that's when we anticipate volatility in the marketplace. Now, how can you know what happens next in the marketplace? If you digest the data, then there's a high possibility that you might, let's say, for example, when you're looking at Trump's tariffs. Now, when you're looking at producers in the US, yes, it's going to benefit them, because if there are going to be tariffs from for products from outside the country, then it means whatever is going to be developed within the country is going to be consumed within the country. Now, that is what the consumers and the producers want. But at the same time, it's going to impact consumers whereby there's going to be higher prices. Now, things technically, products which are made in the United States, usually they are very high quality, meaning they are going to have a higher price to it. Now, let's see what is going to happen in the next few 4 minutes and 17 seconds. Now, remember, taking you back here, there's going to be 3 news releases at this specific time. There's going to be the core PPI, there's going to the PPI itself, and then we do have unemployment claims. Now, unemployment claims is usually released every Thursday. So every Thursday we do have unemployment claims. Now, this one is the people who have filed for insurance for the first time during the past week. Like, how many people have lost their jobs within the past week? Now, this is very, very important data to be looking at, because if people lose jobs, it means that money will not be in circulation in the certain economy that you're going to be looking at, in that specific economy. Now, why do traders care? Although it's generally viewed as lagging indicator. Why? Because if people lose a job today, you're not going to go broke tomorrow. Okay? It's going to take some time, but you can measure, okay, people are losing jobs. For the past 3 months, let's say, for example, people have been losing jobs. If you can look at this data ever since, okay, let's look at February. The job market has been on a decline. There has been only 1 week, which was last week, I do believe so, whereby we did have a positive number in job retention. Okay, whereby this is one of the data whereby less than forecast is good for currency, whereby if lesser people lose jobs, then the better. Okay, but if more people lose jobs, then it's going to be worse for that currency. So when you're looking at Forex Factory, first and foremost, identify the type of folder, the color of the folder, look at the news release, look at the actual number. Okay, the actual number will be released when the time comes. Look at the forecast and the previous number. You can also look at the previous data. So the previous data, as you can see here, 221,000 jobs is the data for last week, 6th March, which was Thursday. Remember, this one is going to be released each and every Thursday. Now, when you look at this data, look at the usual effect as a trader. Is it going to be positive? And if it's going to be positive, what's it going to be for that particular economy? If it's going to be negative, what impact is it going to have in that specific economy? Now, you can also look at the why do traders care, because you are a trader. Like, yeah, why should I look at this number? So when you look at unemployment, as we were digesting, the number of unemployed people is an important signal of overall economic health, because consumer spending is directly, not even highly, but directly correlated with labor market conditions, whereby if people are losing jobs, it means consumers are not going to be spending. Technically, you don't need an MBA in business to understand that. Now, we do have less than 1 minute 41 seconds to go. I will anticipate a negative number on these, whereby this is what I'm going to do. So yesterday we were using buy limits and sell limits. Today we are going to be using buy stops just above this region. My target is going to be the all-time highs. So if I was to switch this over to the 4-hour time frame, the all-time highs is just above, I think it's 100 pips away. Now I'm going to target a 1-to-1 risk to reward ratio. Let me just, so we have less than 30 seconds. Let me enter this position on my device. So I'm going to have a buy stop above 29.49. So I'm going to have at least a 0.1 lot size. That will be like $100. Okay. So let's wait and see. Let's look at the data. If I could split this screen, that would be much better. So 10 seconds to go. So this is where if you're a person who believes, okay, so the data is out. Now remember when you're looking at TradingView, whoa, it's been activated. The spreads were wide. Let's see, let's see, let's see, let's see, let's see. So the numbers have come out negative. So the first one has, whoa, this is going to be a very, very, very big discrepancy between the forecast and the actual number. Remember, we were looking at a forecast of 0.3. The number has come out actually at 0.0, which is so bad. Meaning, we will anticipate gold in the next few trading sessions to go to all-time highs. This is the perfect time for you to be buying gold. Okay, unemployment has come out actually slightly better, but look at the forecast. So if we were to digest this data kidogo, we were looking at a forecast of 226,000 jobs. Actually, the number has come out at 220,000 jobs, which is positive, meaning at least 6,000 people have retained their jobs compared to the forecast. But remember, if you're looking at this data, ask yourself, in an economy of more than 200 million people, 6,000 is not a lot of jobs, eh? 6,000 is not a lot of jobs. So we will want to focus on the PPI here currently at the moment, whereby the data is very, very worrying. The data is worrying. Let's wait and see. Let's wait for it to be updated. Let's wait for the data to be okay. So this is the document that has just been released 1 minute ago. You can see here it is bls.gov. So meaning this is a government document. So if you click on it and then you go to the full story, this is the data. So you can see you cannot access this information until the time and date specified. So if you look at usually there are people who are going to look at this data and then they come up with an average. But if you can just go over the key details, the PPI for final demand was unchanged in February, seasonally adjusted. The US Bureau of Labor Statistics reported today final demand prices rose by 0.6% in January and 0.5% in December 2024 on an adjusted basis. The index for final demand advanced 3.2% for the 12-month. Okay, so up to February, we can see that, okay, things were well. Okay, up to January, sorry. But from February, in February, a 0.3%, you can see this is very low. We can see that it had been increasing consistently over the past few months, but starting February, we only had a 0.3% increase. And then for final demand goods offset over 0.2% decline. Now, you don't need an MBA to understand this data. If you are a trader, just ask yourself, are we headed in the right direction or are we headed in the wrong direction? Now, we can see the impact of Trump's tariff is going to have it's going to have a very, very, very big impact in this, because if you look at the United States, they do source, so currently the trade is running, they do source a lot of goods and services let's say for example raw materials from China, okay, from Mexico and all of those countries. So we can tell that there is a very very sharp decline in producers in the United States of America. So usually after this data is released, we have people who, because there's a lot of data to be looking at. You can see this is a lot of data. There's a lot of data to be looking at. Hauwezi kaa chini uanze kuangalia hii data yote useme you are going to trade as a result of this. No, 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 no. So this is why we usually look at the average, the weighted average of the release. So you can wait for a few minutes. You are going to find people who are going to start updating this data. There are algorithms which usually look at this data and then they come up with a summary. So you'll want to look at the summary, but where we are headed to, there's a very high possibility that gold might go to all-time highs. There's going to be a decline in the United States dollars. So let me add another position here. So if I was to have an SL, I would have it at today's lows, which is 29.33. I do believe it's this low. So I've entered another position here. TP is going to remain. Now, this is martingale, okay? Now, this is the perfect example of a martingale. Now, if I was to have this one here, as price goes against you, you add more positions. Now, it's not advisable, but if you know what you're doing, because you're looking at it on a larger perspective, you can see the same thing that happened yesterday, whereby CPI came out, it came out negative for the dollar, but prices did sell fast to grab liquidity for a further push to the upper side. So this is the same thing that I'll be anticipating with prices today, hopefully. Hope is a dangerous game, but this is what I'll anticipate with prices. So I'll just have my stop loss around 23.33. If prices go 23.32 is a very it's a better zone. I'll have it at 29.30. Let me have it at 29.30. So with the TP, I'm going to be very cautious with this because there's a very high likelihood prices. Now, if prices do break all-time highs, this is something we have seen with gold. If prices do break all-time highs, there's a very high likelihood because the ceiling has been broken. You don't know how far it will go to the upper side. So it's always advisable you have a trailing stop loss. I'm not going to have a physical stop loss on this particular trade because as a result of the data that we have just received, there's a very, very high likelihood that we might see prices of gold making all-time highs. We might come back down a bit, grab liquidity. The same thing we saw yesterday happen. If I was to go to the 1 hour time frame, the same thing we saw happen yesterday here. So this was the CPI release whereby prices did come back down, grab liquidity for the push to the upper side. I might anticipate the same thing here. Now, it's advisable when you start using martingale, enter with a small lot at the top, then increase your lot size as prices go against you. I'm not saying you use that strategy, but it's a really good strategy to be using. So this is going to be the stream for me, particularly because ukishafika hapa, you just wait. There is nothing more you can do, but 3000, nakumbuka Brent akiongelea 3000 could be a very, very, very possible scenario. This is like 500 pips away. This is like 570 pips away, of which gold can do that. If you guys trade gold, gold can do that. So if you can go to the market watch, let's look at other assets, what's done. So GBP USD price action is looking very skeptical at the moment. Very, 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 very. We are in a channel currently at the moment. So if this is one of the few things I used to look at when I started trading. Sometimes it's also crucial to simplify things. Now, as you can see, prices, we did make this massive push, okay, to the upper side. Now, whenever prices moves, it usually moves with impulses and then corrections. Impulses, then correction. So you can see this is an impulse and then we corrected here. So the whole of this is a correction, or prices takes breathers. It never shoots like an arrow. Prices makes an impulse and then takes a breather to prepare for the next push to the upper side. So if we are looking at a weaker dollar, this means we might anticipate a stronger British pound in the next few sessions, but we might anticipate prices coming back down kidogo Where is my arrows? Where is my path? Here, yeah. So I might anticipate prices coming back down kidogo. For as long as we don't close below 1.28648, this is a very good opportunity for me to continue with the trend to the upper side. So this is the zone that I'll be looking at currently at the moment. These lows here, provided let me remove this one. Provided we don't get a candlestick that closes below this region hapa. Let's say a red candlestick of that particular nature. For provided we don't see a red candlestick that closes below this region, I might be enticed for more buying opportunities on GBPUSD. So if the market wants to move, there's a very high likelihood that the market usually tries to grab liquidity. So if you get a candlestick of this nature, whereby it has a wick, the same thing we saw on gold yesterday. Let me make this one bold, kidogo. So if you get a candlestick of this nature whereby it goes below these lows but closes above, then this will give me opportunities to look for further buying setups on GBP USD. TP1 inaweza kuwa just above these highs. Stop loss inaweza kuwa between 30 and 50 pips depending on your risk appetite, but ideally anything above ikipita 50 pips, that means prices, there's a very high likelihood that it might continue moving down huku chini. You also have to look at both scenarios, yeah, because this is inefficiencies and there's a possibility also that prices can move to the downside. But if you're a trader, stick to one probability, stick to one edge of the markets, whereby are you going to buy or are you going to sell. Now euro dollar, the same thing, whereby we did have this massive push yesterday and then the market is consolidating at the moment, it's taking a breather. The same thing, I'll have it. So GBP USD and euro dollar are more or likely correlated, whereby if prices do eventually come back down to this region, I might be enticed to look for further buying opportunities. Sorry, stop loss, same thing, 50 to 30 to 50 pips. Now, Bitcoin has been messing up people. It has been messing up people over the past few trading sessions. You can see we did have a tank. We have tank. If you can just look from this high, this was when? This was Sunday, beginning of this month. Bitcoin has lost more than 19% of its value, of which that's a lot. That's a lot of money. More than 19%. So I've actually, this is the good thing about trading, yeah? You can take opportunities also in selling, yeah. Zamani trading ikianza, we used to, now this is the good thing about martingale, your position yenye nimeingia tayari ishaanza kuniweka into profit. So let's wait and see how that goes. If you are a trader, you can participate in both buying and selling, yeah. You can look at both sides of the market, whereby you can analyze the market and say, okay, what are the chances that Bitcoin might buy. Also, this at the same time, you can look at possibilities whereby what are the chances that the market might sell. So this is the good thing about trading, whereby it's not looking at one opportunity, whereby in the past, let's say for something like S&P 500, people usually like to buy. Most of the strategies you see on the S&P 500, let me just look at the S&P 500. Like most, whoa, it's been tanking very, very aggressively. Damn. Now, this shows that the markets are very skeptical about what's happening in the United States. You can see we did have a change of character here, whereby this downtrend has broken the most recent lows that was created. So initially we were trending to the upper side, yeah. Let me just highlight this, whereby we were making higher highs, higher lows, higher high. We can technically say this is a higher high because it did break this high, a higher low, a higher high, a higher low. But look at what happened. These highs failed to break and close significantly above the most recent highs. If you look at the price action hapa, look at how these candlesticks aggressively broke these most recent highs and closed above and then came back for a retracement for a further push to the upper side. But if you find price action whereby it's struggling so much, so you can look at these. I do call my strategy the rhythm within the noise, whereby you can just look at the candlesticks and ask yourself, like, are these candlesticks healthy? By healthy, I mean, do we have aggressive buying or aggressive selling. You can see this candlestick here. Look at these three candlesticks whereby we did have massive momentum to the upper side, breaking the most recent highs and closing above it. So you can see, okay, the trend is still very bullish. But if you reach a point whereby you get candlesticks that try to break highs, but you do get very small candlesticks of this nature. You see these candlesticks here? Look at these 1, 2, 3, 4. Now these are 4 days whereby prices are struggling to break these highs, and then all of a sudden the next few days you start having massive sell-offs. This can show you that, okay, whatever was happening previously is no longer sustainable, and the markets could be heading to a downward trajectory. So looking at the S&P 500, I don't trade S&P 500, but I usually look at it as a confluence, whereby I will anticipate prices. If I was to use a Fibonacci from this high to this low, I would want to see prices coming back down to this back up to this OB. Now this is the last green candlestick before this massive sell-off. This one here. Now we do have more here between the 60% and the 50% region, which is the golden ratio. I would anticipate prices coming back to that region over there for a further continuation to the downside. So this is the golden ratio here. You can see this candlestick here. This is a very important candlestick to be looking at, because this is the last bullish candlestick before this massive sell-off. So there's a very high likelihood price will come to this area as a magnet. So this acts as a magnet for potential for prices to come back to this region for a further selling opportunity to the downside. Remember, right now where we are, you're in a much better position selling the dollar compared to anything else, because of the way the data has been released. The dollar index says the same thing. The dollar index is a basket of 6 currencies against the United States dollar. So I think it's the Japanese yen, card. It's 6 currencies, so weighted against the United States dollar. So if the dollar index is going to be on a decline, you anticipate the dollar also to be on a decline. Now the volatility index is an index whereby it measures where are prices more likely to head to. Now, if the VIX has a 24.43, this means there's a 24% chance prices might go in either direction. Now, we can see that it has been picking up over the past few trading days. So ever since February, for the past 21 days, the VIX has been gaining momentum, telling you that, okay, by end of February, by 14th February, which was Valentine's, you can see that there was a 14% chance prices could go in either direction. But currently where we are, there's a 24% chance that prices will move in either direction. So volatility VIX is usually a fear index, yeah? It usually looks at, okay, where is fear in the markets headed to? Now, if you look at it, I remember this time whereby prices was here. This was August 2024, whereby there was something happening. I do believe it was there were tensions escalating in the Middle East. I do believe so. So whereby we did have the VIX pushing to above 65%, and we did see a lot of volatility in the market. So I'm going to leave it at there. Gold. Very high likelihood we might see further buying opportunities in the marketplace after 4 p.m. So usually volatility comes after that specific type. Where is my analysis? Where are my projections? Anyway, it's out. So that's going to be it for me. I do believe that you have had an interesting session the same way I have. It's been very insightful looking at this data.